Here is the overview of today's gold market news. Gold price trends and technical analysis. Subdued interest in gold market signals potential for future breakout. Rising global demand for gold amid economic and geopolitical uncertainty. Here are the latest gold price trends and technical analysis. Gold has recently reached an all-time high of $2,800, marking a significant milestone for the precious metal. However, profit-taking at the end of October led to a decline of $50, resulting in a 3.4% overall gain for the month. This behavior is common as investors adjust their positions at month-end, reflecting both market dynamics and profit realization strategies. Following this swing high, a pullback is anticipated, which may be characterized by an initial sharp decline. After this drop, the market is expected to settle into a period of sideways trading, where prices may stabilize before making further moves. There's also a noted 25% chance that gold could continue its upward trajectory towards the $3,000 level, depending on market conditions. The 50-day exponential moving average is currently positioned at $2,644. A close below this level in November would suggest an intermediate pullback, confirming a shift in market sentiment. Conversely, should the price hold above this level, it may set the stage for a continued rally toward the $3,000 target, depending on external factors, such as election outcomes and Federal Reserve announcements. The relative strength index for gold is in moderate territory, indicating potential for further downside movement in the short term. Silver prices are on an upward trajectory, recently testing the resistance level of $32.50, which has now transitioned to support. Silver tends to underperform early in bull run compared to gold, but outperforms when market matures. With silver up over 40% this year and facing resistance at $38, there is potential for significant future gains, particularly if it surpasses the $50 per ounce mark by Q1 of 2025. However, if the gold to silver ratio rises, now above 80 for 0.00, this suggests silver may be underperforming relative to gold. If silver falls below $32.50, it may test lower support levels around $31.45 to $31.75. Silver maintaining support at the $32.50 level is crucial. If silver can hold above this threshold, it could catalyze an accelerated rally towards the next target of $40. The bull market in precious metals is just beginning. With projections for gold to reach between $8,000 and $10,000 and silver potentially exceeding $100 by 2030, investors are urged to remain proactive rather than reactive in the investment landscape. Next, let's see how subdued interest in gold market signals potential for future breakout. Despite the recent surge in gold prices to new all-time highs, interest among investors appears subdued, as indicated by lower Google search volumes for gold price compared to previous years. This muted interest could signal that prices have further room to rise, as increased investor engagement typically follows price surges and could lead to even higher demand. Analysts suggest that gold is poised for a major breakout in 2024, leaving the psychological $1,000 level behind. This long-term bullish outlook reflects a broader shift in market sentiment and indicates that investors should consider the potential for substantial future gains. Historically, gold prices have exhibited a pattern where 80% of the time was spent in sideways movement, with only 20% of the time in rallies. However, analysts predict that this trend will reverse, with the expectation that moving forward, gold will spend 80% of the time in upward rallies and only 20% in sideways trading. This shift suggests a more dynamic and bullish market environment for gold. According to the World Gold Council, global gold demand surged about 5% in Q3 2023, reaching a record high consumption of over $100 billion. This growth has been largely driven by a substantial increase in investment demand, which more than doubled year-on-year to 364 tons. In total, gold demand for the September quarter amounted to 1,313 tons, indicating a strong appetite for the metal as a safe haven asset. Gold's performance has been impressive this year, with gains exceeding 33%, outpacing major indices like the S&P 500. However, the subdued interest in gold suggests that the market may still have room for further upside, as heightened attention could drive additional investment. The upcoming U.S. presidential election on November 5th is expected to introduce significant market volatility due to the political polarization at its highest since the Civil War. Additionally, the Federal Open Market Committee meeting on November 7th will be closely watched, with markets anticipating a quarter-point rate cut. Despite the Fed's recent data indicating rising inflation, there is a strong consensus that the cut will occur, reflecting ongoing concerns about the economic outlook. China is poised to announce a substantial fiscal stimulus package, potentially exceeding 10 trillion yuan or $1.4 trillion, aimed at reviving its fragile economy. Such measures are typically bullish for gold, as they can increase national debt, devalue the currency, and drive inflation higher, all of which tend to enhance the appeal of gold as a safe haven asset. Geopolitical tensions, including conflicts involving Ukraine, Israel, and North Korea, continue to drive safe haven buying of gold. The uncertainty associated with these conflicts contributes to a favorable environment for gold, as investors seek stability amidst volatility in other asset classes.